Hey everyone, welcome to From the Vault, the BitGo podcast. My name is Mike Gross, product marketer at BitGo, and today I'm very excited to be here with Konstantin Shulga, founder of Finery Markets. Konstantin, thanks so much for joining us.
Yeah, thank you, Mike. It's really great to be here today. So, myself as Konstantin, I basically started Finery Markets 5 years ago as the world's first crypto ECN, but I've spent almost 17 years in the electronic space overall. Started with equities, FX, so I was lucky enough to see how all the different asset classes emerge, and the entire idea of behind Finery Markets was to bring some of those best practices into the digital asset space, which I believe together with you guys, we keep changing the world and bringing institutional adoption into the space.
That's not a small task, bringing that to the digital asset space. But I came into crypto not through TradFi. I came kind of from the degen side. So can you explain exactly what an ECN is? I know electronic communication network, but can you just give us a brief overview of exactly what that is?
Of course. And over those years, I've used to present Finery Markets quite differently based on the background. So I'll start with a pretty simplistic term of a marketplace. Imagine a marketplace where on one side we have liquidity providers and the market makers that 24/7 provide two-sided orders and two-sided holds. And then on the other side of the marketplace, we have any sort of institutional clients, starting from brokers, OTC desks, banks, payment companies, or the buy side. So that's it in a nutshell, as a marketplace for liquidity. And sometimes when we just started 5 years ago, when we were explaining that we've built a non-custodial matching engine, basically, where it's a maker-taker model, certain counterparts from non-TradFi background were curious, are you guys running a Telegram chat or a Slack channel where the clients can trade? And it's a little bit more sophisticated with some low latency C++ code behind it. But in a nutshell, it serves the same purpose of basically meeting and matching makers and takers.
Telegram channels. The amount of business that happens on Telegram channels, unsettling sometimes. But you mentioned matching engine. So is an ECN actually a matching engine? Is it what is the difference between all of these pieces? There's you have an automated market maker, you have matching engine, you have all these things. Can you, again, for those of us, I'm saying for those of people who are listening who don't know, I'm projecting that. Can you kind of break that down for me?
Well, crypto is, as a market, as an asset class, is quite different from all the other markets in terms of the history, how it emerged, because it all started with mostly retail adoption and retail clients. Initially, they just were using something like local Bitcoins, which then emerged into more sophisticated centralized exchange offerings. And then all of a sudden, we had we still have hundreds of different exchanges that serves the purpose of disintermediation, where you don't really need a broker. You as a retail client can open an account directly with exchange and trade with all the other clients. And this was the game changer for the crypto space. And that model is probably the most familiar to everyone, whether you're using Coinbase, Kraken, Binance, these are all the major centralized exchanges. The way they operate is they have it's called a central limit order book, or a club model, where everyone is trading with everyone, basically facing an exchange as a central counterparty, which wears multiple hats. It's a broker, in a sense, an exchange, a central counterparty, or a clearing venue, and a custodian, sometimes even a market maker, which doesn't end up well for some of the market players. But yeah, in a nutshell, there's a big segment of centralized exchanges where everyone trades with everyone. Then there are some OTC bilateral relationships where you can basically call up myself or whoever you want and agree to buy and sell Bitcoin to each other for $100K. And that would be an OTC transaction. So if we make it way more sophisticated, we can do the same thing electronically, where there's a bunch of market makers that provide orders 24/7 automatically on a sub-millisecond speed basis. And then every client can have its unique order book based on their unique set of market makers. And that's what ECN is. It allows a client to tailor liquidity based on the set of liquidity providers, the market makers they want to interact with, based on the different instruments they want to trade, and of course, some credit lines. So it's not only about trading, it's also about the credit quality, like the credit line and different settlement terms. So ECN is a more tailored option for trading and settlement.
Is there any difference between an ECN for digital assets than for TradFi, for example?
I think most of the components are quite similar. Like in a nutshell, ECN is a marketplace where you can tailor liquidity from different market participants, and that concept is exactly the same as you would see in TradFi. What's different is crypto as an asset class has its unique features where you have different settlement options with different blockchains. So would you also need to support that and count that when you trade different instruments that later can settle on different blockchains. And it is important to keep traction of that. Also, there are certain other practices like on the pre-trading side, like the way you perform risk management, because in equities you can have certain haircuts, and the PBs are generally providing that infrastructure. Well, in the crypto space, it's still kind of maturing. When we started 5 years ago, there was literally no prime brokerage concept in the space. So certain pieces we were forced to reinvent and probably add a few things on top of that.
Cool. And I actually saw a video of you recently kind of talking about matching engines, just to kind of go back to that. And you said that the industry doesn't necessarily need like hundreds of these matching engines.
Yeah.
Right. But I mean, obviously there is like this power that they have for like price discovery and things like that. But what, like, can you expand on that a little bit? Like what, and kind of how, for example, your business, if we don't need that many matching engines, right? Like how does your business fit into that?
That's actually a great question, and I really like to see the maturing industry right now, where people certainly starting to realize they don't need those hundreds of matching engines, and it's quite ironic because in the beginning, like 10 years ago, when centralized exchanges were just starting, they were disrupting the concept that you don't need a broker and the exchange, so you can have an exchange which will like serve all the purposes, but then every other market player started to build the same concept. So you ended up with hundreds of different exchanges. Like there are probably top 10 or top 20 tier 1 exchanges. And then there's a long tail of smaller exchanges which are struggling with liquidity. Because what is exchange in a nutshell? It is a venue where you need to be matching a buyer and a seller at the same exact moment in time. And the chances are that you will actually be able to find the buyer and the seller at the exact same instrument at the exact same time and price are basically minimal if you have 500 different exchanges. And that's a major issue that the industry is facing today. So even though it's not a fancy thing to launch a broker in the crypto space today, I believe this is what will be happening in the next few years. And I'm 100% certain this is the way to survive for all of those like longer tails of exchanges. And that's what we already see. Because why would they compete with Binances and Coinbases of the world trying to pitch the same market makers to come to their market if they have like 100 times less volume? Like they would better off positioned to keep their loyal client base, to keep their local franchise, their local regulation, but then aggregate liquidity from other different sources without trying to be the exchange themselves and compete with like majors of that world. Like that is exactly the issue and the transformation that's happening behind the scenes. And Finery Markets is exactly positioned to address that issue because we provide matching infrastructure. So instead of them having their own matching engine, they can plug into Finery Markets and have all those market makers already there. And it's a win-win. They don't need to solve the chicken and egg issue with liquidity. Like the market makers are already there for them. And the market makers don't need to chase every single exchange, do another integration, do some sort of bilateral arrangements. So yeah, it's clear win-win, and that's where we focus right now.
Wow, interesting. So you're saying that all these small exchanges will probably turn into brokers?
yeah, that's what I see as the most obvious way for them to survive and to be and stay competitive, right? Like they already serve different, they're trying to solve different issues. Like they try to compete for the clientele. They try to secure the regulation and like the local regulatory framework, and the regulatory adoption, it also forces that change. Because 10 years ago, 5 years ago, you can have an offshore exchange and you can serve pretty much everyone. Right now, in most of the regions, you need to have your local entity in order to serve your local client base. And why would you split like 10 different matching engines and like 10 different liquidity pools? You can have a single source of liquidity and then just become a broker with the local regulation protecting the local clientele.
Makes total sense. I mean, we see that even just with, I mean, I see we see that a lot with like fiat rails as well, right? It's like, why you're not going to reinvent that. So, very cool. Yeah. Interesting. Okay. I want to shift a little bit to obviously a hot topic of the day, or not of, I mean, of whatever months. I want to talk about stable coins and see, I want to know how you see them playing a part, right? In your business and in just in markets in general. I mean, obviously everyone's talking about them now. Everyone's building one. Yeah, I want to get your take on that.
Stablecoin is definitely like the hot topic today, but we were preaching for that like from day one, the day we started Finery Markets. Because if we break down in a very I would say wide brackets, like what are the main use cases for digital assets and for crypto in particular, there are basically three major use cases. Like one is more of a active trading gambling side of things, which will always be there and we're not there to judge. Like the second bucket is the we can call it like a digital gold, where you can diversify and you can save your assets from inflation. And with all the treasury holdings, like with starting with MicroStrategy and like with more institutional adoption, diversifying your portfolio, keeping certain portion of the digital gold, that also is becoming a solid use case. But then the third part, we believe, is way more important because it has a daily utility, like a real world use case of payments, processing, remittance, and everything related to just efficient transfer of the funds from one counterparty to another counterparty, like from one country to another. And that's where we see the infrastructure can be way more efficient with all the like legacy that was built by fintech companies over the last 30 years. Stablecoins is just reinventing and like renewing some of that legacy infrastructure, making it way more efficient 24/7. And we're big believers in that. And like, honestly, I can make a statement. I think stablecoins is the best thing that happened to US dollar after Bretton Woods system. Like, honestly, if you think of that, stablecoin is most of the stablecoin issuance globally is linked to US dollar. Like no one knows the price of Bitcoin in Indian rupee or in Mexican peso. Everyone globally tracks the price of Bitcoin and all the other crypto against the US dollar, and stablecoin made that happen. And that really helps promote the global adoption of stablecoins. Like lots of the countries, frontier countries, emerging market countries, they use stablecoins, US dollar stablecoins to save their assets from the local inflation, and that also powers some of the local businesses. So like this is a massive trend that's only starting. And once again, I think US is probably one of the most like the main beneficiaries of that movement.
Yeah, I think that's absolutely spot on. I think as of today, it's like 99% of stable coins are backed by the US dollar, which is, I mean, essentially all of them. So I think that's an amazing point. I do also appreciate that you don't judge people that gamble on trading. um, but okay, I get like a thing about stable coins, and I think also kind of I think may fit into the ECN business model as well, is kind of like the programmability of stable coins and how may potentially, like, this is obviously, I don't know, well, maybe it's, I don't know how long the time horizon may be, but right, AI is obviously going to play a part into this as well, right? Like, you know, are we hitting hyper speed? Are we hitting hyper scale? Like, do stable coins kind of play into that, especially with when it comes to the ECN matching engine landscape.
100%. So with stablecoins, especially, what ECN brings to the space is not just the trading component. Like trading is becoming quite commoditized. It's also about the post-trade settlement and what happens after you've traded, so that you can support multiple players to efficiently settle that. But even trading itself is also quite important for anyone who is thinking about issuing their stablecoin, because until recently, FX was the most fragmented asset class globally. Like there are dozens of venues, ECNs, liquidity providers that were trading FX. Crypto then took a first place with the most fragmented asset class. But if we think about stablecoins, that can be way more fragmented, because you can have a US dollar stablecoin issued by 5 different issuers or 20 different issuers. And then on top of that, every single stablecoin issuer can support multiple blockchains. So you can have a US dollar stablecoin by Circle on Polygon, and then you can have like a USDT on something else. And you need to have a proper fungibility of those points. And ECNs and Finery Markets in particular is already playing and will be playing an important role for the secondary markets. Because players like BitGo, they perfectly solve the first and most important piece of that puzzle to have the infrastructure for primary markets, where you provide the custody part, you provide the fiat rails, like the client can solve the regulatory issue. And then when we emerge into the next step, you need to have a secondary liquidity. You need to have liquid markets to enable clients interact seamlessly with your stablecoin. And that's where Finery Market steps in. And literally just today, we launched and announced our new product where we provide stablecoin as a service infrastructure for secondary markets. Like anyone who wants to list their stablecoin, they can create their own private room supported by market makers with 10 times more efficiency compared to any centralized exchange, because they don't need to, like, we're not a financial intermediary. They don't need to allocate capital to Finery Markets. So yeah, this is the most efficient solution for someone willing to launch their stablecoin secondary market today.
Nice, very cool. And I don't know if you have any anecdotal data on how much of your volume is actually stablecoin fungibility. Do you know?
Stable against stable. Yeah, I can, probably it's not like the precise number, but it's already around like 10 to 20% where we see different stable to stables. Partly because from day one, we were serving some of the payment companies that provide payment infrastructure, and they use Finery Markets as a hedging venue, because they can not just use us to trade, they can use us to settle with local market makers with local fiat rails, which is also extremely important, especially like after what's happened with Signature and Silvergate. Having a local fiat rail is a very important part. So it's not just about trading, it's also how can you efficiently settle that and to the on and off ramp with fiat.
Yeah, I mean, this is one of the, at least today, this is what the problem everyone's trying to solve. So it's very cool. I mean, you in your last answer, you actually brought up something about regulation. How do you deal a lot with regulation, or because you don't touch anything, this isn't necessarily something that you have to, that doesn't slow you down? I mean, obviously things are changing every day. We're seeing lots of stuff shift really fast. How do you adapt?
Well, Finery Markets is the infrastructure, like a software provider. So we're not a financial intermediary. We are not a regulated financial institution, but we closely monitor everything that happens within the regulatory framework globally. We serve clients from 35 different countries. So we, of course, monitor regulation in Europe, US, UK, and anywhere else where we're present, because we help financial institutions power their trading and power their institutional business with our technology. So in order for us to be successful, we need to be compliant for those clients to use our infrastructure, and also like provide necessary regulatory reports, necessary audits. We're SOC 2 Type 2 compliant, which is also quite important for like anyone dealing with institutional clients. I think we're the only ECN out there globally with like SOC 2 Type 2 compliance.
All right, nice. Very cool. Yeah, I kind of figured that was the answer, but I just wanted to dive in. Cool. So I want to talk a little bit, about Finery Markets specifically. Can you kind of walk me through? You touched a bit on this on the beginning, but like the origin story. Why did you truly start building it? And yeah, how did the journey begin?
Yeah, so like as I mentioned, I've spent 17 years as of today within the financial markets. And what really excites me about financial markets up until today is it's the most important part of everyday life. Like everything we do, whether like on a private level or on the corporate level, we're all dealing with financial instruments. Maybe sometimes we're not aware of that when some pension funds are automatically invested in certain ETFs. And I was always excited to make something truly global and also help to innovate and change the landscape with making financial markets a bit more efficient. And crypto seems to be the most important part where you can actually make the change, bring some of those best practices that were built there for a reason, get rid of some legacy stuff that's probably like overcomplicated the industry of the last decades, and try and bring that into the crypto space. So like it ticked all the boxes where it's truly global, scalable asset class, like the most global asset class. You can trade Bitcoin anywhere in the world. Like everyone knows that. And it's still relatively early in the adoption cycle because we'll only see more and more use cases. So we were thinking, how can we make this global? And the idea of Finery Markets as a marketplace just came up because whenever you deal with something fragmented, whether it's taxi market or like hotels, you need a marketplace, and the marketplace as an ECN seems like a good idea. Partly, as I mentioned about shift right now with exchanges pivoting to brokers, this is also part of our mission. We want to become what we call AWS of matching engines, where if you are a broker or an exchange, you shouldn't think about solving this same issue that like all the other exchanges are solving. You can just outsource the execution part to the CCN layer and do what you do best, is like work with your clients, build better products on top of liquidity that is available through our ECN.
Totally. And like you say, it was very fragmented. Do you see that the market's shifted since then? Like what kind of changes have you seen? Like is it kind of starting to consolidate?
It's definitely consolidating, like with all the recent announcements, like especially like Coinbase, Deribit, a few other players. An interesting trend that we see right now, and this is partly related to regulation, is we see a massive overlap of TradFi players, traditional brokers, and exchanges trying to enter the crypto space, and the other way around. And I see within the next couple of years, there will be way more M&A activity happening in that particular space, because Binance, being one of the largest centralized exchanges, but still not providing traditional asset classes, I believe this should be one of the main things on their agenda if they want to keep their dominance and grow their client base. And the same thing, like we see Robinhood, like what's the percentage like of the revenue they generate out of crypto? Is it like 40% or something enormous?
I don't know, but it's significant, notable.
Exactly. And yeah, we'll definitely see more and more overlaps where traditional guys trying to enter the crypto space, and yeah, the other way around.
For sure. I mean, I couldn't agree more. Obviously, this is why we're working in this space. This is like a softball, I think, but if you were gonna like, what differentiates Finery Markets from your competitors in the space? Just want to like give you a moment to do a plug.
Of course, it's always this is a relatively easy one, because when we started 5 years ago, we were literally the only ECM globally focused on crypto. Right now, there are a few competitors, a few peers that entered the space probably 2-3 years ago. And because the market is still growing, it's always great to educate the market together. So I would say that it's even better that right now we're not alone in that market, and like we know our peers pretty well. Sometimes we even, we know exactly that we serve the same clients. But what really stands out for Finery Markets, we're not just providing the matching black box. We provide the infrastructure, as we call it, ECN as a service for any bank, broker, or exchange to have it as a like out-of-the-box solution. So it's not just the matching part, it's the pre-trading and post-trading infrastructure necessary for to facilitate the matching and client-facing activity. And I think we are the only ECN globally that does that today. So it's not just the matching, but it also like a SaaS infrastructure for creating private rooms, dark pools, systematic internalizers, or any sort of sophisticated trading infrastructure.
Perfect. I'm sold. That works. Cool. I want to kind of like get a couple hot takes from you. Do you see any efficiencies in the market right now that like where you can kind of improve it even further, that we can like accelerate the maturity? I mean, there's a lot of, I mean, not a lot, but there's, you read online and there's controversy. There's like everyone has a hot take about like, hey, are market makers even necessary? Is all this liquidity in crypto even real? Is it all just propped up? Like, do you, are there, yeah, do you see anything that, yeah, do you see any places where we can actually improve on efficiency and actually like boost the market to some like even higher maturity?
I'm more of a libertarian in that sense, where the market will define what is needed and what parts are not needed. Like we saw lots of different iterations in the crypto space and also in the traditional markets where certain market participants, they're just washed away over the years. And in crypto, everything happens 10 times faster. So, well, in a few years' time, we'll probably see that some players are not there yet anymore. But I wouldn't really intervene a lot. I would just let the market decide. And I think the education of the average market participant is definitely growing. So people are becoming more aware about like the good and bad market practices. Apparently, people are starting to realize that running an exchange and your own market maker is probably not the best way to run the business, like long term. So those parts are being separated, and I think debundling continues to happen, where certain functions which has embedded conflict of interest just will be debundled. But speaking of market makers, actually, this is another great question. It's debated for like many years, and I was on a webinar last year with Doug Sifu speaking with like SAC about payment for order flow. It wasn't related to crypto. It was mainly discussion around equities and payment for order flow. And once again, this narrative was somewhere in the room that like, why would we need market makers? But what they are doing and what they're providing is eliminating the market inefficiencies. So if there is an inefficiency, why wouldn't someone monetize on that? And
Right.
No one is hurt from that. Like if one market maker is trading against 5 other market makers and they don't make money on that, then eventually they would stop trading on the particular venue and focus on some other venues where they can have more organic retail flow. So like the market would definitely define itself. Like we're lucky to work in the industry where the like average level of IQ is quite high. So I'm more than confident the industry will figure out the way to progress further.
Yeah, it's a very fair point, right? Like free markets are theoretically efficient, but they eventually work themselves out and find equilibrium. So I think that's very fair. Another question: future of liquidity as a poet, like in respect to DeFi and CeFi, right? Decentralized finance, centralized finance. Obviously, we see a lot of in exchanges, right? Like a lot of crypto liquidity is becoming centralized. So do you have any opinions?
Oh yeah, well, we are also quite lucky being in the middle of the marketplace. Like we talk to all the market participants, like all the major market makers that are not only market making on our ECN, but they make markets on Binances and Coinbases of the world. And one of the most recent conversations I had with I'm certain that they're probably like somewhere between like top 2 and top 3 on some of the largest centralized exchanges in terms of the volume. And what they shared with me as an insight is they really see that over the last few years, liquidity is migrating towards DeFi and OTC venues. So there's literally like this probably is not a massive shift. So it's like steadily going towards that direction. So certain trades and retail clients, they're migrating towards decentralized exchanges, and more of institutional flow, brokers, banks, OTC desks, they're migrating towards OTC private relationships, private rooms, and also like ECNs. So that shift that we see happening, and I think this will still be progressing. So centralized exchanges would need to reinvent themselves. And this is also what's happening. Like we see most of the exchanges, the larger ones, they're launching their prime offerings. And by prime, they mean providing access not just to their centralized exchange limit order book, but to everyone else on the market, including ECNs, including OTC market makers. So it kind of supports my prior thesis that even today we see them pivoting to more of a brokerage model.
Got it. Interesting. So in a way, you're saying they're both going to be they're both be vital, right? They'll serve different purposes, different. Yeah.
It will survive, I think, but what the trend is strong that the share of centralized exchange volume comparing to DeFi, decentralized exchanges and OTC will probably be shrinking. So that's the strong trend that I see.
Excellent. Excellent. Awesome. Well, I think we are just about out of time. So Konstantin, thank you so much. Really appreciate you taking the time to talk to us today. And yeah, we'll see you out there in the markets.
Thank you, Mike. And it's always great to, grow the industry together. Yeah. Thank you.
Great. Thank you, everyone.